Do you know what is the concept of TDS and TCS and its impact on accounting? In 6 steps, you will learn the conceptual clarity of TDS and TCS. Hi, my name is Deepak Nagpal and I am a chartered accountant. Before we move ahead to the 6 steps, let us understand what is the full form of TDS and TCS. What is the meaning of TDS and TCS? TDS is tax deduction at source and TCS is tax collection at source. What does it mean? At source means at the time when transaction is happening, you are either deducting tax or you are collecting tax from the concerned person and depositing it into the government account. Now, how to clear these concepts in 6 steps? Step number 1. First of all, you have to see the transaction. There could be two types of transactions relevant to TDS or TCS. Transaction number 1 could be when you are making payment to someone, and transaction number 2 could be when you are receiving payment from someone. So first of all, we have to analyze the business transaction. If that transaction is equivalent to making of payment to someone or is equivalent to receiving payment from someone. Now, after analyzing and deciding step number 1, we will move to step number 2. Now, if it was either a payment to be made or payment made, or amount to be collected or amount collected. In case of payment made or payment to be made in future, the applicability would be of what? TDS, tax deduction at source. And in case of if the payment is required to be received or received, then TCS would be applicable. In step number 2, we ultimately have to check if in case of payment TDS is applicable as per Income Tax Act, or in case of receipt TCS is applicable as per Income Tax Act or not. Now we will move to, after verification in step number 2, we will move to step number 3. In case TDS or TCS is applicable as per step number 2, now while making payment, we will deduct an amount equal to the rate applicable as per Income Tax Act in regard to TDS. Means if you have to make a payment of rupees 100 and 5% is the rate of TDS, then you will make a payment of rupees 95 to that person and rupees 5 you will hold back to be deposited into the income tax department. Now in case of receipt, suppose TCS is applicable, then over and above the payment which you are receiving 100 rupees, then over and above that, and 5% is the TCS rate as per Income Tax Act, then you have to collect 5 rupees extra. Means total you will recover 105 rupees from the person. And after receiving that, we will move to step number 4. At step number 4, whatsoever deduction was made at step number 3 or over collection we have done at step number 3, we will deposit that amount into the government account on the due date of payment as per Income Tax Act. And after making that payment, we will move to step number 5. What is step number 5? After making the payment to government department, step number 5 is we will file quarterly statement of TDS or TCS with the government department. On the portal of income tax, we will file the TDS return or TCS return, which are called the quarterly statements of TDS or TCS. Now at step number 6, after the return is being processed, the quarterly statement is being processed by the portal or government department, you have to download TDS or TCS certificate and get it signed and give it to the concerned person. So this is the whole conceptual clarity about TDS and TCS transactions and the related impact on accounting. I hope this information was useful for you, and in case you like it, please join my Facebook VIP group and you will get a lot of information as you have been receiving in this particular video. Thank you so much for joining.